Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. National Financial Literacy Month is celebrated in April, which is a great opportunity for us to check and promote our financial situation and skills. Joining us for this segment, we have Mike Edwards, head trader with True Trading Group, to discuss educating retail investors who have not traded in a prolonged volatile market environment. Mike, it's great to have you with us. Welcome to Trade Talks.
Thank you very much. Glad to be here.
Yeah, and it's such a great topic, Mike, especially with the influx of retail investors that we've seen since the start of the pandemic. What's the importance of the retail trader getting a professional education?
It's everything, honestly, because a lot of people just got involved in the markets over the last 2 years because of COVID, whether it was a stimulus check or they were working from home and they had the free time that they thought, oh, let me get involved in the markets. But their experience in the markets is one of irrational behavior where you're not getting normal market activity where it just seems like everything just goes up. And in a normal market environment, that's not necessarily the case. And a lot of people have built a lot of bad habits during that time period and gave them kind of a false sense of reality on how the markets actually work. So getting a real education is crucial once you get into a more volatile environment like we're in now.
Right. And Mike, it's interesting. Every time we see negative headlines, such as we're experienced within this volatile period, they tend to scare investors a bit, but you can, in fact, make money in a bull or bear market. So how could you profit in a market crash?
Absolutely. There are so many different ways. And a lot of people don't understand that there's a lot of different vehicles and trading strategies where you can profit on the way down, just like you can when stocks are moving to the upside. And that's going to be whether you can short stocks, which most retail investors that are brand new maybe don't have the abilities to short stocks, but there's options. They can buy put options that actually go up in price as the share prices of the stocks themselves go down. And there's also inverse ETFs. So these are ETFs that you can purchase that will actually go up in value as overall market indexes or stocks actually head to the downside. So a lot of different ways that people can profit in an environment whether markets are up or down.
And this is one of my favorite questions I love to ask traders, and thinking about proper risk management. How crucial is it to stick to your trading rules in a volatile market?
It's everything. I teach our members in True Trading Group. I teach such strong risk management. It's the core to any trader's success, because especially in volatile environments that we're in, the market movements and the sways are very large, and the moves are often larger than people initially expect. And having stop losses in place where if a stock reaches a specific price level, you're going to get stopped out of that trade to protect your downside. Instead, people don't do that. Stocks move down against them. They get scared. They don't know what to do. They start buying more. And that's when retail traders get themselves into a lot of trouble, averaging down on losing trades when they should be stopping out, exiting. I always tell people it's easier to recover from a paper cut than it is stepping on a landmine. Keep those losses small and controlled.
Yeah, that's a great point that you make. And I also think that inexperienced traders will go into a trade, okay, how much money I can make, versus thinking about, okay, what is the downside? Look at the risk up front more so than how much money can I make. So Mike, how can the retail trader utilize active trading profits to fund a longer term portfolio? Yeah,
that's really the key in throwing down markets, is being able to not just sit there and watch your 401k, your IRA balances decrease as markets are moving to the downside, but profiting on the way down through some of the means that we were talking about before, whether it's inverse ETFs, shorting or buying put options, and then taking some of that profit, because once the dust settles and stocks stop going down and you get into that bear market territory, that's when you want to start to become a buyer. That's when you want to take the profits that you're generating, put them into your long-term portfolios, whether it's a 401k or an IRA, where it's a tax-deferred account. We can push off some capital gains taxes and put it into your IRA and 401ks, and then look back 3, 5, 7 years from now and be very glad that that's the actions that you took.
All right, Mike, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thanks for having me.